Never Am I Rich, and I am sorry. I think I'm going to have to sell my Chrysler stock. Today they announced their earnings and everything is falling apart. Well, the stock did crash. The stock crashed over 12%, which, yeah, it doesn't seem very good. I mean, when it goes from 17.44 to 15.23, not exactly the best day in the stock market. So, let's go through what's going on. Number one, they reported earnings lower than the lowest expectation by about a cent, which is never good news. Analysts don't like that when they report earnings below where they're supposed to be. So that's a no-no. Number two, I don't know that I explained it very well, the downside or bear thesis in my last video. Number two, though, is the China trade war and tariffs on their manufacturing components like steel. So some of that's cleaned up, but definitely the China trade war is still on and tariffs might go up at the end of March. So that's something to watch out for. But is there more? Yes, there is. So what do we have? The PE ratio currently sits at about 7.1, and that is better than it was yesterday. The forward PE ratio is expected to be about 4. I don't know if this is quite correct. It could be a little bit higher, so if it's 4.5, even if it's 7 or something, that's still pretty low. The price to book ratio is now like 0.7, somewhere in that area. So when you're buying this company at $15 and change, you're really paying less than what their assets are expected to be. Might be a little bit closer if they were to get rid of their goodwill, but that's kind of, you're getting a pretty good deal on this company. The dividend, they're going to talk about it in April. So this is another thing. The dividend is going along, they're going to vote on it. It's expected to be $1.50 per share for a one-time dividend, and then a continuous dividend of about 50 cents per share. So if that passes, the 50 cents per share, I think that's like 3.7%. So if you bought now, I mean, you'd be getting a pretty decent dividend, plus the 1.5. I mean, in 1 year after their dividends start release, you'd be getting like 14% or something at the current price, which is a pretty good return on your money. And well, but what if your stock fell 15%? That wouldn't be good. So let's look at how realistic that would be. The 5-year growth, still it was at 28% about. It slowed down a little bit, it's about 27%. They do expect a little bit more money being spent on upgrading their plants for electrification of vehicles in the future. So you can expect growth, but probably limited growth compared to what they had originally estimated. So even if this was growing at 15%, which would be like the kind of industry average maybe, or a little bit higher, or even if it didn't grow, what would that mean? Well, let me go through the numbers and think about this. If China represents 2% of their revenue, what is the potential downside? 2% of the revenue is fairly negligible. I mean, they could lose a little bit more money than that, but I don't know that the stock fell 12% today, and if you lose 2% of your revenue, I don't know that you're going to lose 12% of your value of your company. Especially when they're growing in other areas, especially in North America, they're doing pretty well. They feel like they have a pretty good grasp on pickup trucks, and they're coming out with their Jeep Gladiator, which is going to be kind of a mid-sized truck, which fills a niche of people who like rugged trucks. So anyways, I think they have a decent lineup of vehicles, and they're going to have a good turnaround of vehicles. Europe is expected to be kind of still the same. So I can see a few possible problems with this stock. If the Chinese trade war gets worse, and if the global economy slows down, people may be buying less cars. And so that's where I kind of see their growth stagnating. Instead of expecting it to go to maybe $2.50 per share or like $3 per share in the next couple years, maybe it'll stay at $2 per share. They've really made this company a lot more profitable than it has been in the past, and that seems to be a more likely scenario. I think everybody who talks about the possibility of recession these days is, I mean, usually people get it wrong, but if there is a recession, the people at Davos were saying it's probably more like a slowdown, global slowdown, so they don't think it's going to be a big recession, like everybody just halts. But if they're wrong, you know, I still see this company as at least going through the motions of, you know, keeping their earnings very similar. And then, you know, there's some outside theories of what if, you know, all the seniors retire and sell off all their stocks. That would drive the S&P PE ratio, average PE ratio to like, I don't know, like somewhere close to 8. But this company is still below that. And so in time, you would think it's likely to go towards the mean. And if it was at 8, you'd have a stock price of like $17, which is kind of where it was. And then, you know, if the S&P PE ratio, if you're looking at like 22, it would be a crazy number. Like the stock should be worth $46. So that's kind of a high end. I personally think this stock in the next 3 to 6 months, you'll have to weigh, because if the trade war keeps happening, if there's all sorts of crazy political news, the stock might kind of dwindle for a while longer than people want it to. But in the next 3 to 6 months, if they do resolve the trade war, I think a lot of car stocks will go up. And I think Chrysler, like Fiat-Chrysler, should probably go, my guess would be like in the at least $21 range. And then I still don't see why it can't be stable like by 2021 or 2022 to be a stable price of like $25. So yeah, I kind of see in the next few years Chrysler as being like a stock that almost doubles, has like a 3.7% dividend from where it is now, and a one-time bonus of like, you know, 10% just about. So that seems like a pretty good buy to me. But hey, maybe I'm missing some downside. I'd love to know your thoughts in the comments below. Feel free to leave a message. And other than that, thanks for watching. See you in the next video.